Okay, so I wanted to take a look at this because I think it's a really important set of events for going on right now. This is the clouds parting for the bulls. This is a really important moment, I think, throughout the analysis for today. Look at what has happened so far this morning. We had decay come down and give us bullish samples right through here. There was a switch back there, but the focus here was the bullish samples. Why? Because look at tension. We got tension all the way up to 0 from these bulls. We were able to hit and impact tension. We got tension to 0, which the bears stepped in with a decay retest right here. And they were able to do what they could to try and defend, but they couldn't keep tension under 0. So after the market had sampled the bulls, we found them active. It leaned up, tested the bears. The bears got a 0 test. And then it leaned back and it sampled bulls again. You could see right here. And we have our trapped orders right there. So we have everything we need lined up. This gives us our second bullish sample for today. Now there's another piece of analysis. You come over to the Trade Trust group. You go to the live charts here. Mine looks different than yours because I have to put... Anyway, take a look at this. You remember this? We were talking about this just yesterday into the close. We have the stat ADI got set outside of reality. That it can't push to these levels. We're getting a divergence coming in here where that price was pushing down lower and the stat ADI hasn't pushed down as low. So we have the positive divergence that we were looking for with the stat ADI. We have bullish liquidity showing up at the same time right here. We have bulls already playing. So there's a precedence here. I think it's ANC. Precedence, I don't know. Anyway, so there's a precedence here. And the point is the bulls are already showing they want to play. They're active. They were able to impact tension. They invested cold hard cash right into here, trying to pick this up. The bears, they did defend. They tried to defend this 30-minute probabilities. They lost control of daily tension. You can see almost immediately after yesterday. So the bears are having some problems keeping this big move under control, and the bulls are getting an opportunity right here. So this looks to me like the clouds part. The clouds part, and the bulls can see this opportunity that shows up for just a few minutes that has the potential to be a really strong trade. It's important because this is the moment where these bears who put lots of money into driving this down are now getting a stress test. This is the first time I think that the bears really are face to face with legitimate risk-taking opportunity for the counterparty. And I'm almost hesitant to call the bulls the counterparty because tension is already up over 0. So I think that the bulls look to me like tomorrow or Monday when the market opens, they're going to be the controlling party. So these bears have a little bit of time, and if they're going to do something, if the bears are going to do something dramatic, this is the time to do it. If there's some news event they got up their sleeve, they've got somebody out there who can take a big fat hit. I just have a hard time seeing the bears want to do more after this. I mean, if you think of this as like a capital expenditures, like you have money in the market working, this is a lot of money in the market working. And doing that again into the close would be extremely expensive. So I don't think a brute force attack would be a great way to go, meaning just stuffing the ask a ton, filling orders. I think the way to go would be fear-mongering, something treacherous that isn't really treacherous, just sounds treacherous. We could trip the algo sensors. You just figure out what the algorithms in the market are sensitive to for news. You just print a news event with all the words that they're sensitive to. That could possibly work, but those are usually pretty short-lived. Like 10 points at most in this type of volatility. And then it just, if you don't have something behind it, I just don't see a great case for the bears coming in to try and keep this going. I see a good case for the bulls to say, let's pop this up. We can control this into Monday. So what would they need to do? Well, right now, the bears have a couple of positions in the market that you need to know about. We have a pretty wide multi-day retest here. So there's the wide, there's the short, the wide test. It was a wide and then a short amount of time. So the second smaller one, and you can see that's here and here. Then they have an intraday. See that? So this went all the way negative, came back up. It was a pretty good move. This is an intraday decay retest, and it moves and moves and moves and moves and moves. And you can see that right through here, we had the volume come in, move down, came back up a little bit more, finally turned about here. But so they're going to have stops sitting at least up here. Not above the high, above here. Then this morning, you see decay push positive. They got trapped orders right off the open. So we have bearish liquidity right there. Did they impact tension? No. So this was it was a hit, but a fail. So this position will likely have, bears in it. So while that I would say this was not bears coming in and hitting the market down, this was bears stepping back and letting the market do the hitting. This will have shadow bears in it. So it will have some liquidity here. It's important to remember that, the distinction, because it gives you information on the character of the big players. They didn't hit this morning. The big players didn't hit this morning. It was the shadow players who came in and did the work for the big players. The shadow players just couldn't pull this off. So we have a pretty decent run down here with shadow bears here. We have some risk reduction, so less, they're weaker positions here. And you have to ask yourself, well, why, if you have liquidity here, why do you want weaker liquidity positions here? And it's because it's a weaker hand. And it's not unreasonable. Think about it. If you put all your money in to getting this market to gap down, here's all your money, you want the market to do the work. You don't want to do it. So the bears not coming in and hitting there is important because it tells you about the structure of the market. I think the bears were looking to do hands off, let the market move all the way down and do the work for them. So we have some positions here that you should be aware of, and they're all clearly defined for me anyway. I think these are pretty clearly defined positions. This one here is going to liquidate a little bit higher. Likely, I don't know, I think above yesterday's high would be actually pretty reasonable. And shadow bears are not as strict and stringent about things as legitimate bears. The shadow bears will do things that an institution wouldn't do. Like, for instance, shadow bears would wait for the high of yesterday, where that an institutional bearish trader isn't going to wait for some level to break. They're going to look at the internals and what's going on and say we are right or we are wrong long before a level gets hit. So I think shadow bears are more likely to wait for something like yesterday's highs. I think that institutional bearish traders, if there are any trying to pick up these risk reductions, which I don't think make a whole lot of sense to fill, but they did hit and they did work, so there's going to be stops there. So again, this looks like shadow bears to me. Why don't I think it's institutional? Because to take a decay retest, you need, one, to have no options. So there's no other choice. And two, you have shown to want in. And I don't think the bears show that they want in. When you fail to hit liquidity off the open and then you get a decay retest, it's like, well, you didn't show us that you really want into the market. So I don't think it's sensible to assume that large institutions hit there. I think it was people chasing the market. I think these were chasers, these were chasers, these were chasers, these were chasers. The fact that it worked is coincidental, not causal. It coincidentally worked. These people chase everything and spent 2 or 3 weeks losing everything they had and then got 2 days of success. And I don't think these 2 days of success have made up for even a small fraction of the losses that people who chase lost for the past 2 or 3 weeks or more. So the fact that it's working for them is just a coincidence, but they will put a feather in their cap and they will take to Twitter and they will let you all know how right they have been all along. Good. Say nothing to them because we need those traders to prop liquidity in the future. Let them have their day. Let them. Or we won't see great bullish trends tomorrow. Anyway, so this bullish position's coming in. I wanted to bring this up because I think that we've seen the bulls come in and hit, but we didn't have any conflict. You know, it was just, there were some shadow bears coming in, but having them hit, seeing they could get tension over zero, seeing some bearish positioning come in after tension got over zero. Right here, I think at this moment, you could say we had conflict. We had legitimate bulls and legitimate bearishness coming in here, but that legitimate bearishness has a problem. It's failing to keep tension under zero. So the conflict shows up, and there shows up with conflict after time. Usually you give it a little time, we see another bullish position here. I think it's looking like there's a pretty decent opportunity for the bulls to drive this right up through these people's position. And if these guys are still here, if these shadow bears, if these guys are still sitting here thinking that this bearish position is backed and funded by the US Federal Reserve, they're going to help us close the gap. That's what's going to happen, because once this pops up, it gets back up to the highs. They'll start realizing this was, they shouldn't have held on. I mean, most of the way back, I realize that. But if it gets through yesterday's highs and they still haven't liquidated, they're going to be even in more of a pickle, and they'll start wanting this to come back down so they can dump, but it won't. And then it'll just keep going until they do liquidate, and either it'll close the gap on them or they cover, whichever happens first. And I think that would be a reasonable scope for this trade. That's what we're looking at. We're looking at a move from 2992 or whatever it's at, 95 right now, up to 3,200. I mean, you could see that, right? You can do that math. That's 200 points. This is what's on the table. And if you're an institution, you're probably filling 100 to 1,000 contracts. Just think about why this is such an important moment. We have the stat ADI coming in. We're getting that positive divergence. We're getting some liquidity showing up that they can pick up. We have some conflict in the market where we have people on both sides of the market showing activity. We have a big precedent in the market for lots of things going on. It's just a really this is a really important moment, because if these bulls come in, they hit, what's going to happen is tension will probably move up, and we'll be able to see tension rise, and they'll sustain control of daily tension. And the potential initially is going to be, well, I don't actually think the gap is where it's going to go. Let me show you where I think it's actually going to go. I think it's going to go where the bears actually started. Let me turn off that. This right there. This is, I think, where the bears really started their position. This whole thing was just a shakedown. That shakedown just trying to get people out. This right here is where I think is the actual origin of this entire move. It was right there where we had bearish liquidity show up. So 3,200, 320, whichever one you want to look at. That's the goal. So that's where this whole thing started. Was this, not this. This was a shakedown. This is where it actually started. If we can pick up the stat ADI and we can get the market to continue to rise, that is the makings of a major pivot, meaning months. Whoops, I dropped my pencil. Months. We'll be looking at months out. And so this has a whole lot behind it. You might think, oh, this is just a lot of fear coming in. That was yesterday. I think yesterday was a lot of fear coming into the market. Into the close, we started to see more important events happening. Now we have positive divergence, and the clouds are parting, the bulls have opportunity, and we have room to run. We have conflict. We have people on the wrong side. We have so much going for this. If this can hold together, and these bulls can take that massive pile of money that they are face to face with right now, which I don't see why they wouldn't. I don't see the bears doing great. They lost tension. They didn't pick up liquidity this morning. I mean, you can say to me, you could say, well, Logan, but look at how far price moved. I'd say, I don't care. Price isn't enough. If price is the only input, price and volume are the only input on your algorithm, it's not enough. It's insufficient. It doesn't suggest what's actually going on. It just tells you that the price moved. And as far as I'm concerned, when prices move really far, that's just a lot of opportunity setting up. So is that opportunity to reverse or to continue? Price is insufficient as a singular calculation to let you actually determine what institutions and people are doing. If you don't have more, you are inferring heavily or really strongly deducing some generalities, which is that something like every time price moves down, that's bearish institutions. Or every time price moves up, it's bullish institutions. And those are just fundamentally inaccurate statements. And so I think in this situation, yeah, price moved down a lot, but you also have to remember price moved up a lot. The percentage-wise, and I know the people were throwing around words like 20%. And it's just like, oh, shush. 20% from where? And I'll bet you they didn't calculate 20% from their cash average long positions from a while ago. They did 20% from the largest number or some silly thing like that. I don't think percentage is as important as you think. There are some institutions who act solely based on percentage pullbacks. And I know it's a popular thing for people to do. Say, if it pulls back this percentage, I just buy blindly. And it's not necessarily a bad strategy as long as the percentage is large enough and it matches at some degree with volatility. Okay, but it doesn't tell you anything about what's going on in the market. I think that, sure, you could say this moved back a lot, but I think what you'd be missing is the internal condition, what's going on. And I think there's a lot of opportunity here for the bulls. And that's the point I want to make, is that, yes, it moved a lot. That I'll give you that. And if you were trying to buy into this dip or you accidentally filled a bunch of longs, sorry, but I think that there's conditions here that are suggesting to us that these bears had a very short-lived event that did not actually go all that well, since the next day they lost control of everything. So unless they have a magic trick up their sleeves, unless they have something better than what they did yesterday, which was pretty intense if you ask me, this is probably not going to continue down. Something I want to talk about really quick, since we have a few minutes while this develops, is the different types of price movement. And I think it's important to note that yesterday's price movement, you could see, was almost trend line-ish, right? You go like this. And there's another type, which is the parabolic type. And these two are different, and let me just tell you what I think causes them. This type of movement where you have a continuous, almost 45-degree angle over time, I think is like a flood of orders. I think it's where you have big players with retail accounts and retirement accounts and all sorts of things. They're getting this consistent flood of orders coming in all day, or they have a big balance of orders they need to get rid of over time. And so this is filling those orders over time, and every time the market gets to a certain move, the orders just keep coming. And I think that's that. A parabolic move, on the other hand, I think is a spike in demand. It's a sudden realization that something is moving and you just have to get what you can get. And that is not like this flood of orders is a measurement of, here's your broker, and he is the bottleneck to the market. And all these people out here are wanting to do something, and they're having a bottleneck through a broker, and that causes this flood of orders, and it makes it just do this. Where this, I think, is people who are trading in, more than anything, they're probably trading size, and they're likely the broker or institution, and they don't have bottleneck issues. Like if you're filling orders and you call in to close and your broker tells you they will fill your order at the close of the day, you are dealing with a bottleneck. If you do not fill instantaneously like everyone else, you have a bottleneck. And I think that's what causes these trends is the bottleneck. It's a natural bottleneck in the market that gives the brokers and everybody this enormous unfair advantage. If you can see dark pools or liquidity, or you can see the, the order book at your institution that you don't, the real one that you don't share. These guys don't deal with it. So you get the parabolic move versus the sort of trend line look. And I don't really pay attention to those shapes on a much larger scale typically, because I think people get all excited over the course of a day. Their adrenal glands get exhausted after maybe 2 days, maybe. And then we lose the whole trend line concept altogether, because that's how it works. I mean, you get excited for a day and then you're like, and you're exhausted and you just don't care. Over a month trend line, it's not that they don't, if you have strategies that use that, it's just for this type of concept that I use for the intraday analysis, I don't think it really works as well. And I think this one made sense. I think yesterday there was a flood of orders, people coming in who were terrified, and that it lasted that. And then this parabolic dive here, I think, was a sudden recognition of demand. And they're two completely different bodies of people with two completely different ideas, doing completely different things that happen to be next to each other. Okay, so those are the two types of price movement that I tend to look at. I really don't look at much else. Okay, so what's coming up next into the close, the last hour and a half? Well, we need to see what these bulls can do, and you can see we're seeing them impact tension. These guys are hitting. They're succeeding, they're getting price up, tension up. The objective here for the bulls, what the bulls are thinking is simple. What can we do so that on Monday we can pump tension the most? How do you pump tension? You liquidate the counterparty. You take out the big boys on the other side. So what could these bulls do to increase their advantage on Monday? Now, what are the bears thinking? The bears are thinking, what can we do to get daily tension back under zero? I think they just had this awesome thing, and the focus is, it's hard to move back to 30-minute, but I think the goal is to say, how can we get daily tension back under zero? And I think the easiest way for the bears to do that is the same, is to liquidate the counterparty. But in this instance, I think that the bears are running into a problem, which is that the bulls are very active. And I think that the problem they're facing is, well, if we give the bulls a foot in the door, if we give them too much of an edge, we'll get crushed. So that's the focus. You want to make sure that these bulls right here don't get too much. If they liquidate these positions, that might be too much motivation, and that could be a problem. Oh, I got kids coming in. So we're going to look at that. If the bears can keep them from liquidating these positions here, then that's going to give us the best edge for the bears. Just don't let them take us out, because if they do that, the confidence comes in, the recognition that we're turning the market. It could be a real big problem, and tension could stay up. So I think that's the focus for the bears. Don't let them take us out. Keep it just away from our lower positions down there. That could stimulate these bulls to get very excited. The bulls just need to not screw up. If the bulls get liquidated, right now, that's, I think, the most, if the bulls get liquidated, this pushes down, we get through, they get liquidated, we see tension curl. The issue with that is that now the bears are going to be focused on Monday trying to pop this down, and we could see a really aggressive move down because they took out the bulls, and that's really motivating. And so they're going to want to get tension down under zero. I think they're going to run into problems. I really think they're going to run into problems. This at 20% is a little too far to gap and run like that. And so that means that on Monday, we'll have bulls in control, and the bulls are going to get a 30-minute sample, and the bulls will probably get a daily sample. And that's a big issue, because with what we're seeing today, the bulls aren't done. They're saying, all right, well, we're seeing this. Let's pick up some lows, see if we can get a position, defend tension, see if we can topple the bears. So the bears are going to run into this problem on Monday. Whether they win tonight or not, it doesn't matter. The deed is done. They will have to face the tension problem no matter what happens. So that's something to focus your attention on, is to keep this in mind. These bulls need to pump this up, and they need to do it on Monday. And as far as I can tell, they've hit. They're doing just fine. So into the close, if the bulls could do anything, I think the best thing that they could do would probably be just to move slowly. Well, and that would be something, if it just looked like this, kind of thing, I think this would optimize the opportunity for the bulls to be able to get the market going too quickly. And I think we're going to scare the bears, because isn't the fear right now, and I think everybody's probably thinking this, isn't the fear that we saw a big move down going to move? That's what this whole thing looked like, right? A big aggressive move down. It was really fast that it could recoil. So I think moving too quickly would scare a lot of bears out, which reduces the scope of the upside. So I think a nice slow move would be the best option for the bulls. But that wouldn't be terrible, because the bears, that's what they want, right? They don't want to get pushed out, because that would give them a foot in the door. It would get this looking up higher. So right now, I think most likely tension will close maybe somewhere around here, somewhere around 20%. I don't know if we're going to see that move a whole bunch into the close. The big show is going to be Monday. We're going to again get to see what can happen here. What's important to know: these people are here. There are bulls here. We can see their impact. We can see their liquidity. We can see they hit price. They have hit, and they have impacted tension. They are here. So bears, in order for the bears to get this to happen, they're going to not be just moving down. They will be actively sabotaging a strong bullish position. I think there's a lot of opportunity here. This is a good setup. The bulls got a lot of things that they really like. So that's important, because the mentality of the bears is a little bit different. They're not just like, let's pick up liquidity, let's pump tension, blah, blah, blah. They're thinking, we got to sabotage this position. How do we go about doing that? I mean, it always looks like cheating if they're going to pull it off, and it would have to be really aggressive. A move down to the day's lows, or even just a little bit through the lows, is not going to get these guys to shake. They're not going to dump their position from a little move down. If that move down and move back up, no. They're going to need that to really dive. Is it possible? Absolutely. This is high conflict. We have big players with a lot of money at stake. Big moves, large ranges, huge volatility, high volume. You can fill anything you want right now, and you're just a fly on the wall. This is big money. Big money. So I absolutely think that we have motivators for everybody to just play dirty. But at the end of the day, the bulls have tension, and the bulls have two positions that have successfully impacted tension, and the bears have failed. They lost tension. They haven't impacted tension with any of their positions. The best they had was well, they had liquidity off the open, but they failed to impact tension with it. And their decay retest probably right here was likely the best position, because that was in response to something a little bit better. I think this is their best position for the day. That's what they got. They lost tension. They lost it. This is a scramble for the bears. I think if I were bearish, if I had shorted this and we saw this right now, I'd be scrambling to get out. I'd be running for the exit, trying to get the best possible position. I'd say if this keeps going, I don't know that I care. The risk right now for the bears is rising. If you had a line, let's say that this red risk for the bears would look something like this, and then suddenly it starts rising, we look like that. risk would start looking like this to me. This is the curve that I think, if this was risk and this was time, that's what the curve would look like. If you start to get this bullish position, it's going to start, you start seeing the opportunities that they have. The bulls came in here. That's what, yeah, the risk is starting to rise. I'd be concerned about trying to hold for further lows. It's not that they can't happen. It's just that when you see that risk look like that, when you see the opportunities for the bulls look like that, it was a good move. It was a good run. Good job. Great. Now move. So that's where we are. This will be really interesting because whatever happens, not on Sunday's open, because literally we could see this gap down on the ES. We could see this 3,000. We see it close 3,000. We could see it open at 2,800. Nobody cares. It would shoot right back up, probably open at 3,000, and absolutely nobody would know that it did that overnight. We could see that. It's whatever the Monday open looks like. And I think the Monday open has a lot of precedence for the bulls. I think the bulls would just love this. This is meat and potatoes type stuff. It could continue down, so make sure that you're dealing with your risk. These are big, big, big ideas. So if you're thinking, oh, so a 10-point stop, no. These are big, these are major trend setting events. This is the type of stuff that changes how we go into the next couple of months. This is going to alter the way that the probably majority of the next futures contracts trade. This is big stuff. So if you're sitting there thinking, oh, I'm going to put a 10-point stop on this, you're probably going to get destroyed. It's just likely. You have to be thinking this is a major swing. This is the type of thing that changes the underpinnings of market characteristics. This is the kind of stuff that changes everything. Well, we could easily, let me just say this now, we could easily see the events here. These events change the public narrative that's being pumped into our media outlets. We could see this change the entire character. I think that that everybody knows exactly what the media has been talking about lately, the tone that everybody has, the feeling that it has. These events could absolutely change that. We could see a 180. That's the scope that I'm thinking here. I try to make this really clear why, like how important I think these events are. I think they're more important than probably most people are thinking. If we see them move up, we see it move down, I think it's going to show up across all your favorite securities, all your favorite media outlets, everywhere. And it won't be that they're going to say this or that. It's that the tone will shift. And we'll all, I think if the bulls picked this up right here and wiped out the bears, we'd probably see a continuation of the narrative kind of thing. Because that would lead to more of the same that we've been having. More upside, we need to pump more fear into the market because sellers drive prices up, retail sellers. So I think this is going to change a lot. So the world we live in, at least the way we perceive it, a little bit, maybe not a lot, a little bit, enough that you'll notice. Anyway, I'm trying to stress the scope of this. The scope is the size, how deep it goes, how far of a move we could have, the size of the players, how important it is to the people participating. So hopefully I've stressed that enough. I think these are big. This is a big deal. That the conflict developed right here, right now, is going to change a lot of stuff for the market. And so big precedents. Everybody's going to play with all the cards and all the funds that they have to get. So these little events here that you're looking at, you're thinking, oh, it's just, normal stuff. And I'm thinking, I think everything going on in here is just probably dirty and difficult and complicated and deep and hard to read from this level. Anyway, so that's what's going on right now. Into the close, 1 hour. Keep your eye on tension. I want to see tension continue to rise. I want to see the bulls continue to slowly move this up to keep these folks in their position to not run. Because if they run, it could mute the upside. And if I were a really smart institutional bear, I try and scare the bears. Because if you're here and you want to go down, I think getting these people to dump early, getting a nice spike up, would probably be the best way for you to keep this moving down. Because you're going to shake out all those mouths to feed, make it easier to move down by thinning the herd out. If they're really cunning, that would be the type of cunning I would love to see. I would just love to see that. We don't usually get that type of malicious behavior in the market. It's just like psychological warfare. So that's what I think is going on. Keep your eye on this. I think a nice slow move up is what I want to see. I want to continue to see tension to make its way higher. I also think that you keep your eye on the tick. We have the tick high right off the open. I would like to see the tick high down here. I would love to see this give us a tick high like here, and then get over, over top of it and then start to grind. I like to see the inversions out of lows, not into. I like this. If you have the tick high here and then it goes into a low and then it goes, I don't like that as much. I like to see it out of the lows. Much better, in my opinion. It looks better, works better. So that's what I'd like to see, some of the events that I think are coming. You need to keep your brains on. Don't shut them off. Your thinking here is, as long as the bulls continue to impact tension, as long as they continue to give us a nice slow move, and tension continues to rise, that you should continue to believe that the bulls are here. You should continue to believe that the bulls see the things that you're seeing and that they're going to do exactly what you would do if you were them. You need to watch that. Keep your eye on tension. Keep your eye on any events. We have all sorts of things coming up that we could, I don't usually watch intraday decay retest, but that's a potential there. We have velocity just hugging zero here, giving us no indications of what's going on. Keep your eye on the advanced decline, right into these lows here. It's like 750. So if we see that advanced decline continue to rise, that's a good thing. You want to see stocks creeping their way up. Keep your eye on the new highs and lows. They're very back and forth, and I think this is an indication of stocks moving up and stocks moving down simultaneously. That's why we see them all. They're just taking off in both directions. So lots of activity. I think tension's the biggest importance, though. This is going to be the one. This is the possibility space. They're saying, all right, everybody's in. We got cards on the table. The poker chips are down. People are looking at each other over their cards, trying to pick up on a bluff or a tick or a tell. They're calculating probabilities. And we're going to see if somebody's going to fold. And I think the bears are going to fold. That's where I'm at. And you can have a different opinion. You have different experiences and analysis. That's okay. I think the bears are going to fold. That's what I'm doing. So I think this is great trading, in my opinion. This is okay. It's just okay. This is pretty good. In my opinion, this is great because the narrative's hot. The players are here. We got awesome stuff going on. Numbers are all over the place. This is good trading, in my opinion, because it's just so dramatic. We've got a lot going on here, and this is the good stuff. This is where you have some awesome things happening. So, okay, enough of the rant. I'll do a little live stream at the close, talk about how things closed. Keep your eye on those indications as we move through this next hour. Tension. I think the advanced decline is going to be a really quick indicator for you to keep your eye. Look, we're already up 900. See that there? This is moving. We just went from 800 to 9. It was 100, up 100. Unfortunately, this label right here only moves as fast as the chart pricing. Thinkorswim has a data feed. There's like the price, and that is real time, and it pumps into here. And then they have the data, which is different, and that pumps into the actual chart prices like here. And this data comes in packets. And so this one right here they won't allow you to plot the real-time feed. They'll only allow you to do the packets. So your numbers at the top of your chart can only be as fast as the packets are allowed to download. Maybe it has to do with their server bandwidth or something. So this can also be limited by the data packet comes to your computer. Your computer ships it over to the platform, so Thinkorswim. Thinkorswim crunches numbers, and if Thinkorswim has a lot of data coming in, there's a big fat bottleneck here. From the Java-based code that they used, it's pretty slow when it comes to crunching through large data sets. So they get these big old packets. It's not like price move here. They'll get like, I don't know, maybe 500 quotes or something like that. And then those 500 quotes get put into their crunch. That puts it into the plotting platform. So there's this big issue with getting updated real-time charting with the way that they built it. So that's why this can be behind. It just has to do with the limitations of the platform. I like it because it's free. You can access all the data, and they have pretty good data when it comes to accessing lots of things. So you can get lots of stuff. There's no monthly fee pressure that can hamper a trader. So I got over here because it was free. So you can access all this data. You just have to keep in mind that this is not real time. So you need to step back and say every little tick can't matter to you. So if you want this real time, you need to pull up an actual chart, type in right here. If you want the one I'm using, type in ADDC. And then don't watch this right here. And that'll give you the ADDC in real time instead of the bottleneck time. Hey, Megastroke asked, can you summarize what you're doing, BD traditional TA in a few words? To be honest, I don't know what you're talking about. TA? I don't know what TA is. They said, are you doing SPY options, trading futures? I trade futures and options on futures. So I exclusively have traded the ES for most of my trading career. So that's all I do is the ES. I have never traded the SPY. I don't trade ETFs. I just trade the futures and options on futures. How long I hold these trades is a very subjective question. I trade narrative and I trade what's going on in the market, not signals, stops and take profits, things that can be optimized out of pricing. So I look for narrative. So whatever the market's doing, I try to do those things. My typical goal is just 10 points. I just like 10 points. I think that how much money you can and do take out of the market is a very personal, that has a lot to do with you. I also think the way that you take advantage of narrative has a lot to do with you. You need your own risk management models that fit your personality. When it comes to narrative and stuff, I like to pick out what's going on. I like to figure out intent. My objective, if I could know anything, I'll write it right here. If I could know anything, I would know the intent of large institutions. If I could know anything, that's the golden ticket. Because large institutions have the money, and the money is all that matters. Nothing else matters. If I could know what the large piles of money we're going to do, I would just take naps and open trades. That's all I would do with my life. Oh, technical analysis. See, I've been at this for 10 years and I still get sideswiped by... No, the drawdown is actually almost none. So if you can nail narrative, your success rate shoots up to like 99%. If you can figure out what's going on. The other type of trading is statistical. So if you have like an entry system, then your drawdowns actually exist because you're not looking to actually be right. You're looking to actually lose money. So in my opinion, you're saying, I'm willing to lose money in these moments. So if you have a trading strategy that's right 50% of the time, what that means is you're telling your broker or you're telling the market, because they know what you're doing. Don't think you're a mystery using your RSIs. That you're saying, I'm willing to make money here and you can take my money here. And the market then uses those times when you said to them with a stop loss and a known strategy, you said, you can use me as liquidity here. And the rest of the time, as long as you don't want to, I'll make money. And so you're essentially saying, if there's no money being injected into the market, I'll try and make some money. And it's, in my opinion, that's just the way that statistics work when you're an institution. You just look at people saying, how do we get orders to fill that are willing to let us take them out of the market? That's all you have to do. I actually think that narrative trading is significantly better in terms of success rate, but it asks something of you that you won't want to pay. It's hard. And most people say, I want to calculate it and own it and then walk away and be lazy. And that's, and it's up to you. But it's not that they don't both work. I just think that this works better. For me, it's just me. I like this. You might not like this. I like it. So somebody else asked, what's the difference between ADD and the ADDC? Okay, so the ADD is a condition. It's attention deficit disorder, which I think the DSM said was no longer a disorder. There's only ADHD now, okay? That's how it is. Okay, the ADD is the advanced decline, right? But really what it is, it's the ADDP, and this is primary. So Apple could have a couple of, it can trade on an exchange here, an exchange here, an exchange here. Only one of these exchanges is the primary, and Apple trades the NASDAQ. And that's the primary exchange. But it also trades other exchanges. And so when you look at the primary only, it only considers if this is above its previous day's close, so +1, or below it, and that would be negative. With the composite, the ADDC, it's looking at all of them, all the exchanges each one trades on. And if they're, and it will take those into consideration. So if it trades on 2 or 3 exchanges, the Apple could actually weigh in as +1 here and +1 here. If it trades on 3 exchanges, it could, on the ADDC, actually bring in +3 on the advanced decline. So it brings in the composite, all the exchanges. And this one's the primary, just the primary exchange for all the stocks that are in that group that you're looking at. So you can get them for the New York Stock Exchange, the NYSE, which is this one, the ADD. That's the New York Stock Exchange. You can get them for the SP, which I think is ADSPD, advanced decline SP 500 difference, and that's the SPY. It's just 500 stocks. You can do it for the IWM. You can do it for the Dow. There are a lot of them. Well, there's 16 of them that are offered by Thinkorswim. I like the composite. I think it offers more data to look at. I think it gives a better story, I guess. And it's just the one that I use. I think that the advanced decline primary tells a very similar story as the advanced decline composite. Just for me, it looks to me, and after looking over the data, that the composite one moves more. So it'll augment moves more. So an aggressive move up will move up further on the composite. So it just makes those types of things a little bit easier to see. That's just a preference. I don't think it's like right or wrong. I like the composite. Okay, so Megastroke, you're asking a lot of you're asking questions that I think are the wrong types of questions. You're trying to look at, and they're not wrong types, sorry. You're asking questions that are about, like, what's my money management strategy? And the reason that I'm not entirely certain that that's the best type is because the way that I trade is my way of trading after 13 years. I could give you rules and then you will watch me break every single rule because it's my way of doing. I'm burdening my own risk. So in these types of things, I actively try to not tell you what I'm doing. My goal is not to tell you this is a bottom, this is a top. My goal is to express to you the narrative that I think is really going on so that you can come in and use your strategy. It's something like, and this is why I think that markets are hard. It's like if you sit down in a room and you see, let's see, here's a boy and a girl. She's very nice hair. And I gave you 2 minutes to watch these two talk. So they're talking, blah, 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 blah. And then I said, all right, $1,000. Does he like her? How accurate do you think you'd be? You think you could figure out if a boy liked a girl after 2 minutes of discreetly watching them have a conversation? I would argue that you would have almost a perfect success rate in that betting. I argue that you'd be able to nail that trade almost every time because you're using a type of logic called embodiment. Embodiment is those magical cells in the back of your head, the mirror cells, they call them, where that you become the boy. You become him, and then you look at you, and you understand him. You don't look at his gestures, his little movements of his hands, or maybe the way his eyes are. You don't look at data points. I mean, you do, but your assessment is that you understand the boy. And I think trading is like this. It is you're a discrete third-party observer of a social engagement between two parties, and you will understand them. Now, how you take advantage of that is up to you. In this instance, we were talking about the bulls coming in and being active, the bulls coming in and being active. I talked about why I think the precedent is here, why I think the bulls have good motivation to play, why I think there's money there. Then we looked at the bears and what they're doing. And your job is not to say, so buy here, 10-point stop. No. Your job is to say, oh, I get it. I see what's going on. And then turn me off, go to your computer, your stuff, and do your thing with this understanding of what's actually going on. Because the big problem that all traders run into is after you get into a trade, you realize that statistical trading requires blindness during, and this is important, the trade. And this is the issue, is that you're forced to enter a trade and then go, I don't know what's going on. Statistically, I may or may not win. And it's not that that's bad or anything. I'm not saying that. I'm just saying I want to know what's going on from the moment I get in. I want to know who I'm trading with, who I'm trading against, how they're going to make my trade work, how far it could go, what the potentials are. I want to feel the market, all of it, the drama. I want to smell when people are afraid. I want to see when they're excited. I want to know when there's enthusiasm and fear and fighting and anger and people get bent out of shape. And so I want to pinpoint where opportunity is if it's there and successful so that I can build that narrative and watch people fight. And that's why I talk about conflict. I think right here we saw conflict. These guys and these guys, face to face, head to head, who's got the better hand? And the bulls have a better hand right now because of, you'll have to go rewatch it. We went over all the things that I think that matter. So when it comes to asking, what am I doing? If your whole focus is my money management strategy, you have effectively missed the point. I'm not here to tell you when to buy and sell. I am absolutely not here for you to follow me. I'm here to tell you the story so that you can have an idea of what's going on. I think I don't know. Go check. See if he's here. So you can take advantage the way you want to. Yeah? Well, I'm doing this. Can I talk to the traders and then I'll come check in a minute?
You can check first.
You want me to check first? All right, I'm going to go check something first. I'll be back in a second. Okay. Yeah. So I want to make it clear that my objective is to tell you what's going on, so that you don't get stuck in that situation that I think we've all been in, which is when you say you get into a trade, it stops you out, and you have this realization that you have absolutely no idea what you're doing. And that happened to me a lot when I started trading, because that's what happens. You don't know what's going on because you have absolutely no idea what is going on. I want to know what's going on. If I get stopped out, I want to know who did it. I want to know why they did it. I want to know what they're doing. I want to know where it's going. What does it mean? Because human beings are built. Whoa, that is a lot higher than I thought. We are built. That's an L for meaning. We cannot help it. We must have narrative. If you are neglecting narrative, what you're actually doing is telling yourself stories and lying about telling yourself stories, because we're built for it. We do it. It is our survival mechanism. It is who we are as a species. We must have a story. We must. We thirst for it. Anyone who tells you not to follow a narrative is missing the point of humanity, of human experience. We need to know how we fit. That's meaning. We need to know what's going on. That's narrative. So if you get stopped out, if you don't know why or who, it will emotionally and psychologically crush you. And if you've been there, I laugh because it's happened to me so much. You will get wrecked and you'll hate it. Because you'll just say, there's this indifferent universe that doesn't care about me, and I'm all alone and nothing matters. And it's very depressing. You need to know there's meaning out there. You need to. It's not a want. It's a requirement. And the funny thing is in my opinion, is that there's a lot of people who sit and tell me that they don't use narrative and they have no meaning in their trading. And I think they're liars. They're lying to me and to themselves. And it's worse that they're lying to themselves, because at some point they'll come face to face with the fact that they have no meaning. And so all of their losses are just soul destroying. So I think it's more important for narrative. You do your risk management your way. If you want to use the RSI, that's fine. You want to use a trend line, you want to use MACDs, you want to use all your tools, go ahead. I'm all for it. Just make sure that you're trading it in a way that corresponds really well with the narrative, what's going on, so that you know when to not take a signal and when to take a signal, and to know why a signal got blown out versus when it worked really well. So you can pick up on that intent, and you can see. So right now, we've been walking through this, and I've been at this for a while, so I kind of know what institutions think like. So a nice slow move. So if you had tools that took advantage of a nice slow move, wouldn't this have been great? And then you take a look at tension. You can say we are getting what we want. This is great. I love getting what I want. I love it. I love it. I love to get what I want. We're getting the story we wanted. We're getting the narrative we wanted. We're getting the setups we wanted. So there's a lot here. Hopefully that is what's coming across, that you're getting a narrative, that you're saying. If you're not, maybe this isn't the place for you. anyone who's listening, not just someone who asked the question. Just the whole point is to tell you what I think is actually going on, so that you can say, oh, well, if that's true, then here's how I would act, and then use your tools. It's not to tell you the world is this or that. It's to say, here's what's happening. Here's the story. Here's what people are doing. Here's the frustration. Here's who they are, where they are, why they are, where they're going. And that's it. It's not to tell you to buy or sell. Although I think this was, I don't know why it keeps doing that. Although I think this was a great spot. This was one of those moments that I call the clouds part, because everything lined up right at that moment for the bulls, and there's just so much on this. I wanted to get on and stress this while it was, playing out, so that we could walk through and talk about it, so you could see the narrative and do what you want, or do nothing. Maybe this is like drama TV for you. Maybe it's like a soap opera. You want to listen to me ramble. If you're spending your time just listening to me ramble and you're not actually participating in markets, I mean, there's better hobbies. So after you learn the system, if you sit and listen and you figure out how to walk through the narrative yourself, your goal is not to follow me, but to become me. I don't want you bothering me for the rest of your life. I am not your father. I want you to learn to do this on your own. Take it and use it however you want. There's lots of tools here for free. The Zoom, online, Discord, Twitter, everywhere. You figure out how to do it, use all the stuff, and then go away. And in the end, hopefully, I can find good traders to work with that I get along with, because I may not like everybody who's listening to my voice, and you may not like me, but that doesn't mean we can't help each other. So maybe I find some good people along the way. Maybe we make some money and we do it together, because in my opinion, this is the loneliest job on the planet. You spend all of your time alone in a room, huddled and bent over a computer, having enormous amounts of stress dumped into your arteries in the form of cortisol and high blood pressure. And it's horrible. It is a dark, lonely world where you have an entire market doing nothing but actively trying to sabotage you and separate you from your money. You are under an immense amount of pressure all by yourself, and it is the fundamental worst condition that you could ever work in. And if you're asking about my motives, which is a legitimate question, if you haven't asked about my motives, you should. It is because I don't want to trade alone. Like, I have my computer here in the middle of my living room because I hated operating in a quiet little box. I try to run a Discord, talk to people and listen to their things and say stuff, because it is a lonely, boring place that is pain and suffering, and your spouse probably won't care about what you have to say. You tell her your trade didn't work out, he or she, and they'll try to sympathize, but they're not your peer. They don't get it. They're not doing this too. So I'm combating loneliness. I don't want to be alone doing this. I want to work with people. And turns out other people are smart as I am. And I assume that if people have really good ideas and concepts, and you've been at this for at least a while, that those ideas are probably legitimate. You believe them for a reason. And I can accept that. And we can understand each other. And I don't know, for me, that's a big benefit. If you think that you can do this alone, you're nuts. It will kill you. You will take losses and find yourself staring at the wall, wondering why you lost money. And there's no one to talk to, because nobody understands you in your world. Not your spouse, not your kids, not your friends, not your parents. Your mom's convinced that you're gambling. All of our moms are. We know that. So that is a despair that is hard to cope with. And I think when you have people to work with you, they can help you when you're being emotional. They can walk you through understand your troubles, because you see them struggle and you struggle, and it's loneliness. If you don't understand that, you haven't been doing this long enough. And I think that communities are a big deal, a huge deal. And you need communities run by people who don't have a conflict of interest, a subscription mentality, which is I maintain you, not educate you. I have absolutely zero desire for subscriptions because I know that as soon as I found riskless profits, I would just seek to maintain all of you as dumb sheep, because it's easier to collect a monthly fee than it is to actually place a trade. I cannot charge you. I can charge you for the tools. If you want to buy these from me, go to the BaconTrading site, buy them. Because those were hard work. At best, those are pieces of art that I put my heart and soul into to develop over the course of 12 years. I can charge you for that. It was a lot of work. And I think they're extremely cheap. $350 for a piece of code. Most people charge you $200 a month. So I don't want you to be subscribed to me. I want you to be my equal and my peer so that we can have a positive sum game here where that we both benefit. So if you're looking at my motives, these are my motives. And maybe they're stupid, but they're the best I've got. And that's why that I do any of this. And I think that's why the community that we have in the Discord, at least, is happening. You don't do this alone. You need people who are just like you, especially to understand you. It is really nice to have a group of people who have any idea what I'm talking about. Have you ever said to somebody, oh, I see this great trade in the markets, and you realize that they're not a trader and they have no idea what you're talking about? It's the worst. I want people to understand me. So now you know a little bit about me and why I'm here and what I'm doing and what this is for. And if you want to support me and you're like, keep doing this, go buy an indicator or something. Or better yet, share your thoughts regularly. I like that. I like when people get in and they say, here's what I think. Here's what these are the tools I'm using. Here's this and that. That benefits me a lot. That's my objective. So, okay, those are my thoughts. It is sad. It is sad. It's a lonely world. And if you don't understand the value, the sheer dollar value of community, you have missed a massive component of the human experience. And a lot of us just miss it. We just do. But once you start trading, you go, man, I wish I had somebody to trade with. Boy, it would change a lot of things. So that's a big part of this. And somebody asked me once a while ago, how do you get to the point where you can read the narrative like I do? And it's simple. Do what I do. Share. Help people. Stop being a stickler about your secrets. Tell people things. Community. In the end, you're too complicated and nobody understands your silly ideas, but you can still share them with an opinion associated. And we can still trust that you're an intelligent, normal human being. And we can take those into consideration. A good risk taker, a person who really can take risk, can actually improve their trading by hearing multiple opinions. If you can't hear somebody whose opinion is different than yours and still operate successfully, you do not understand risk. You are being lazy in the pursuit of somebody paying your bills to live in your mom's basement. If you can't understand risk, you really shouldn't do a whole lot in the markets until you understand what that is. You need to know how to accept a counter or different opinion, and that improves your trading strategy. It's sad, but everybody in the trading room does this all the time. We use each other as indicators all the time. I can hear your opinion and I think you're wrong, and I will use you as a counter trend signal, not because I don't understand risk, but because I do. Or if somebody has a differing opinion that maybe downplays the scope of something I think, I can use that. And I may say, you're right. Or if you have a counter opinion that is indeed more accurate or more important than what I think, I can change my opinion in a heartbeat. The point is that when you really have a good grasp on risk, more opinions improve you, not destroy you. And that's a very difficult lesson that traders must learn. You have to learn that. You'll realize it one day that if you have a fragile idea in your head of risk, you can't tolerate counter opinions, that you don't understand how the world works in terms of risk and payout. Let me just write the formula here for you, okay? Okay, are you ready? It's not a math equation. It's this. There is no growth without risk. Hands down, this is absolutely true. You cannot take profits in the market without risk. In fact, it is illegal to do so. If you get found cheating in terms of the legal definition for trading is that you were able to extract capital without risk. And that isn't a social contract like commissions and stuff or spreads. That is where that you were making bets based on what was going on and you were taking profits with no risk. It is illegal to initiate new positions under that pretense. You can get to the point where you have no risk. You can do that, but if you start a position and you have no risk because you cheated, the thing you'll get put in prison for is the fact that you extracted capital without risk, and it is not legal. So if you want to grow your account and yourself, which if your trading strategy doesn't change you, it doesn't pay you either, the risk, your risk here, you need risk, which means that you should be pursuing risk. You need to find it. Counter opinions is a format of risk. Sharing your thoughts with the public is a format of risk. All sorts of ways to take risk without placing a trade that can help you hone your skills and get better. And then you can place trades and take that format of risk, which is a sharper form, but I think it actually impacts me less than some other forms. So this rule is very, very important. You need risk for growth, which means you need other people, in my opinion. If you want to tolerate higher levels of risk without actually blowing out your bank account, you should work in communities. So anyway, that's the formula, in my opinion, for how to understand and cope with risk. It's the fact that it has to do with growth that makes it important. Okay, so now that you guys got me rambling and off topic, but good questions. Those are good questions because they get at the heart of what is important to me, at least and that means you understanding how that you can use this whole situation to your advantage. Let's take a look at what's going on. Remember this? We got ourselves a decay retest. And this is an intraday one. Intraday retest. It's where you have a more major pivot. Excuse me. I need some water or something. Where you have a more major pivot, meaning it pivoted, getting tested. I do not accept little tiny things. It needs to be significant. It's getting tested. We had trapped orders, which is the people on the wrong side. These are statistical traders. And then we have new lows. These show the market lurched in your favor. Okay, so this setup here is very similar to this one. Bears, bears. Stops when it comes to a decay retest will be immediately above, probably a point or two, at least on ES, above the position. So that's where there are stops. A decay retest is a weaker position. It's the way that it's built is a little bit weaker. The thing that happens here, the way that I interpret this is that you take a decay retest and what happens is you get a reduction in risk. So they tend to pop positive pretty well. They'll pop positive right there. And you expose your stop loss. So it's a trade-off. Well, if you know where I am and how to stop me out, but my risk is a little bit lower, maybe that's a good exchange, right? I can give up a little bit of my advantage, my secrecy, in order to get a little advantage when it comes to risk. And I think that's what's happening. And I think that's what a decay retest is. So in order to take one, you need two things to be true. One, you need no other options. And what I mean by that is that both velocity and decay for the bears, they're above zero. Above zero, above zero. So These guys cannot get a liquidity the way that I define it. They have no other choice. If they want to play, they have to take this decay retest. The second one is they want to play. I think it's important that you have established at some point already that this side wants to participate. And I think we've made it pretty clear that yes, they do want to participate. They do want to do this. And we have a couple of positions here that show that there are at least bearish-minded people in the market. And I think one legitimate bearish position, the issue is that they've lost control of tension, which tells you that they are with their backs against the wall. The bears are feeling pressure. So these are true. So I think the bears have stepped up and they're participating with the decay retest. Their stops will be right above here. What a decay retest needs to lead to, what's the point? The typical next thing to happen. If the bears get in, the bears are in, right? Boom. What do they want? Well, they want to win. Well, if you're taking decay retest, what you're trying to do is push the market. So the next thing to do is this. Can we find bulls? Yeah, right here. I think this is the closest spot. Tension down to 0. So if you get into a decay retest successfully, the next event is typically sampling the other side. Sampling means finding a data point, creating an event that can expose them a little bit. And getting this number 2 and through 0 here a little bit is it's gonna sample those bulls. So the decay retest, they pop in. Where's it headed? Well, it's going right here. Why would you sample the bulls, you crazy bears? Because this is what I think the mentality is. The probability, and I'm gonna write this percentage symbol just for probability, because I don't want to write the word probability. The probability of bulls failing increases with this, with each sample. So every time the bulls get tested, there's a chance that it's, once or twice, but if you get 10 samples, there's a chance the bulls will fail to hit and consume liquidity, and that causes problems for the bulls. So I think this is the objective. You get a decay retest to sample the counterparty to increase the number of data points, hoping that they will fail so you can take them out. So I think this is the goal. They want to, again, sample those bulls so that they can try and catch them screwing up. The more samples you got, the better chance there is. And right now, as far as I can tell, there are, technically I think there's 3, here, here, and here. I don't count each one of those, so I'm not going 1, 2, 3. They're clearly the same concept hitting the market. You could if you wanted to, I suppose. But I think there's 2 here. You could see it was pretty wide there. Each one had its own, but really it's these 2, right? You could see how they sort of cluster together, and you could see that there was liquidity in both. Why is this one connected to that? Well, just because it pushed down doesn't mean it stopped it out. You need to really push, and you can look over here. I don't think that they stopped out here. I don't. And then they pumped it. So we have 2 samples here. Getting a third, the bears are thinking if we get them to fail, oh, we could drive this down and we could get our Monday that we're looking for. We get that daily tension down to 0. What's the problem with that? There's one big fat glaring problem that I have with the whole philosophy, and it's why that I think the market is bullish. This is a weak position. 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 And this one, off the open, they failed. So that's not great. We don't have any initial strong liquidity position for the bears to operate from. They just have a bunch of weaker positions. Not bad, but overall, it's not great. So do I think that these bears are going to be able to come in and boom, not without cheating, calling Fox News or something, CNBC, can you please run that story that you had in the queue from earlier? Please. And make sure that it triggers all the algos, at best. And even that type of thing is hard to sustain. News rallies bounce. We know this. Knee jerks aren't sustainable. We know this. So cheating, in essence, isn't the most sustainable format for profits. It works, but it's not sustainable because it bounces. And if it bounces, it's just going to whipsaw people out. And I don't think it's going to confuse the bulls. I think they would know what's going on. I think they do it too. So it's not a big deal. What's most important, and I talk about this a lot, is that you need to give your opponent the gun, and your opponent needs to put the gun to your head and fail to kill you. In that moment where your opponent had everything they could ever want in terms of winning, and they fail, you win on a deeper level. You win on a level that drives trends in the market. It's important that the counterparty, your opponent, gets a very fair chance to slaughter you, or it wasn't a real stress test and you haven't won on an emotional level. And I think that's what they're doing here. I think the bears, these bears they were able to pressure this position here. It didn't work. They lost tension. I think the bears had some really great opportunities to wipe out the bulls, and they wussed out. That's what happened. And that's the kind of victory we need from the bulls. We need an emotional, deep-rooted victory. Now, could this change? Could everything go, oh, yeah, well, of course it could. The narratives are inherently, in my opinion, it is fundamental, changing. And they're not going. One thing that I think is a big deal about narratives is that if we're here at A and we move to B, okay, we can never go back. And this is one of the problems with using too much historical data in your statistical analyses, is that you can never be A again. This is lost. You can never be young again. You can never go back to being a child. You can never go back. And I think narratives, the way that I look at narratives, is constantly compounding and changing. They always move forward. You need to be flexible, meaning changing which direction you're going in an instant if you have to, and you need to be attentive, because little moments can have big impacts. And if you don't believe me, it's because you never dated in high school and college. Little tiny things can change everything. And it's the true for markets too. Little tiny things can just upset people, because these are people. So you have to be attentive. You have to be flexible. It's constantly compounding. And the last and most important feature of a narrative is the future. Narratives do not draw you into the past. They're always going, where is this going? What's next? And so tensions, we're trying to see if bulls can pump tension. The goal here is to liquidate these guys in a constructive way for some future event. You know what's in the future because it hasn't happened. Have the bulls liquidated the bears yet? No. You also know it's not in the future if it has already happened. So if they liquidate these guys, you are no longer in that narrative you thought you were in. The bulls are no longer looking to liquidate. And that's what I call the victory lap. You have to be careful, because once they get everything they want, do not start to trade as though they're going to get what they want. It's over. They're doing the victory lap. Yay. And if you try and trade with people on the victory lap, a lot of the times you take an unnecessarily high spike in risk that can hurt you, because you were waiting for the victory before you participated, which means you thought you could trade with no risk and take profits, and it doesn't work. So the victory lap is victory lap is a scenario where that you have a narrative with no future potential. Your narrative is dead. And then you try to trade it, and that's a victory lap trade. You're trading, it doesn't work. So, okay, so look at tension here. So look at this. Let's think about the narrative. We have these bulls with this potential, lots of upside. I mean, things are set up. This could just be a monster. But I think into the close today, taking it slow will help optimize liquidating these parties. If they dump too soon, we could see some trouble. We want to see them continue to impact tension. Tension is the possibility space of markets. It is a negative number because tension is counter to force. So this is like force and this is tension. So we're feeling a downside tension of negative 28%, but we're also feeling an upside force of this. And you can just see it. And I think it's better to just see it. So look at that. You see, so we're seeing this upside force. So it is the natural result that a strong upward push has a strong counter force, a strong tension. So that's why these are opposite. So as you push up here, as these bulls slowly inch their way into the market, we want to see that impact here. They're shifting the possibility space in their favor as they inject capital into stocks. If you inject hard capital with no margin saturation, meaning your broker's not attaching 50% margin to sabotage your trade, it's legit capital, market wide, then the possibility space starts to rise because markets go to and from money. That's it. Cash, hold hard, unmargined cash. So as you hit that everywhere, it starts to rise, and we can see that rising here. And so the nice slow move to keep these guys unaware of what's coming. We can see that they're impacting the market. So they're here and they're crawling in. We have an origin position. We saw the press, so the bulls hit here. We said, yes, bulls are here. Then we got a great setup where the clouds parted. We have an origin position. This is where this whole thing is starting from. We have liquidity at that, really nice liquidity. It just looks great. They impacted tension out of that. So we can see that when they came in and hit that liquidity, they impacted the market. They took off. We have a lot of some other things going on in the market and other analysis. So I think there's a lot of things lining up here. We're tracking these guys. We're tracking what they want. So on Monday, what do they want? And if you're a bull, and you need to be both a bull and a bear all the time, if you're a bull, what you want is tension up here, and you want daily tension to stabilize. This is their like finite goal. This is the thing that they want on the books. But you have an intermediary step, which is how do you get there? And it's to liquidate the bears. If you want to pump tension, you want to change possibility space, there's two ways to do it, really. One, you can take all the money in the world and inject it into the market. It'll move. But it's going to cost you all the money. It's much better to get into a trade where the other people do the work. It's like starting a business. You don't start a business so you can do all the work. You put money into the business, you step back, and then everybody else does the work and makes you money. You don't want to do the work. So how do we pump tension without doing all the work or injecting the capital, which work in the market is risk? Is you liquidate the counterfeit. We have some people here, but decay retests don't make for great liquidations. Liquidations make for great liquidity. This one right here, that's the one we wanted to wipe out. So to get this to curl up, the market would just, if the market gapped up to here and then moved like that, tension would be like here and just go whoop, right off the open. So we know we can, if we get that up there, we can liquidate those guys. That would pump tension. Or the market could open sideways. We push up, sample the bears, the bulls get sampled, and then liquidate them that way. That would probably have tension open probably here. It would go like this, and then it would look like that. So the bears would come in, and the bulls would come in, and then the liquidation would accelerate tension up higher. That's the other way. I think that once you have an origin position in the market, you work with what you've got. So I think it's more sensible for these guys to be focused on liquidating this position, and then after that, this position, than it is for them to say, let's hope we can tempt bears in now that we've already got them. I think it's more sensible to say, here's where we're headed. And it's not that they're looking at the past, they're looking at the person. There's people here, and they have hopes and dreams and everything. So we got to finagle the market up and liquidate those guys in just the right way to really optimize the profits or make the pain hurt as much as possible. But unless you're a terrible person, you'd rather focus on the euphemism, which is optimize your profits, which means a nice slow move is going to make sure those option prices and the gammas and the deltas and the VIX don't move too quickly. Because if you expose your hand too fast, a bunch of shadow trading jerks come in. Jerks like me. I don't know if I'll call myself a shadow trader, although I am. I am not an institution. I can only shadow these people. They'll come in, there's too many mouths to feed, and it can slow down the move. So I think that's the goal. We're looking here. Our first stop is here. Stops right above. You know the stops got hit because price goes whoop in a snap. It's just like instant. You see it pop, at least on the ES, it's like 1 to 2 points. Right where you think the stop should be, you see it go snap right through it, and you go, there they are. I see them. They hit those stops. And then the next stop will be here. Though, since we only have 15 minutes left in the market, I think these are probably the most likely to just hit into the close. And then we look at Monday. Why Monday? Well, because remember, we want to pump tension. So if we open this higher on Monday, these guys never had a chance to get out. We can liquidate them and make a nightmare scenario for the bears, which is going to optimize bullish profits a ton, pump tension, everything moves up higher, and we will be going, yay, like this. Yes, I do this. Yes. So that's what we're looking at. Do I hold over the weekend? I absolutely hate, with all of my heart, holding over the weekend. And I'll tell you why. There's a really good reason for it. Because I have one of these. And they don't like me when I hold trades over the weekend. So I don't. Because I need to walk away from markets during the weekend. And I think if you... Maybe this might be a good trade to try and hold over the weekend. You would be saying, I'm going to give up being a calm, peaceful, happy person, in my case, father and husband, for an extra 10 or 20 points, which I don't think it's worth it. To be honest with you, I've done it, and I am a grumpy, constantly on my phone. I'm mad at Trump or Obama or whoever because they're doing things and it's stressful, and I would rather come back on Monday, enjoy the narrative, take advantage of the next thing that goes on, than sabotage my family relationship and upend my life balance. So I don't like holding over the weekend because I like feeling balanced and peaceful inside or something. It's not worth it to me. The cost isn't worth it. And if you have kids and family, as far as I can tell, most traders agree. If you don't have kids, you'll get there, hopefully. So yeah, I think that's where my eyes are right here. Like this is, and when I say my eyes, I mean that's my target right now. So how long will I hold this? Well, here. Because I think that's the sensible thing to do. I think the sensible thing to do is get that risk reduction right here to leave this till Monday. So how long do I hold this? Well, in this case, right there. That. What's my risk reward? That's not even, I think that's a misleading. And if I was to answer all those questions, I think what you would do is you would wander down a path that does not lead you to personal success. You would wander down a path that is not, what you need to do is understand why this is moving in the direction it does. Answer the unanswerable question. The one they've been trying to hide from you since day one you got into the markets, and they said, no emotions, turn off your brain, shut down and be a robot. Blind yourself and trade our statistical models that we completely and thoroughly understand 100% and 100% are giving to you for free. Shut your brain off. Yeah, those guys. They've been trying to hide narrative from you from day one. And it was only apparent to you on the days when you were in your darkest place, when you got blown out of the market and could not figure out why, because your tools were insufficient to talk to you about what's happening. That was the only time you were allowed to see that was what you were missing. And if you were smart, you took notes. And if you were stupid, you did it for years. And if you were really stupid, you never quit. And at some point you said, oh my gosh, there's a story going on here, and these people are doing the same thing every single day to people Oh my goodness gracious. And statistics are just lies. So I keep I keep venting. I keep ranting while we're waiting for this to move. Okay, so check out tension. You see that? We're seeing, you see how it's sort of, it's moving at this, and it's sort of accelerating a little bit. I think people are picking up on it. I think that this is sort of moving up. We're seeing these guys here probably support the market some more. You see that right there? This decay retest, stop losses right here. You see how that's nice and smooth through there? There were stops. How do we know there were stops? Because there were stops, and then we could see there were stops. That's what it does. It sweeps through those stops. Now, on occasion, actually it's pretty frequent, you get what's called open interest theft. What is that? Open interest theft is where you let somebody else write the contracts and then you take them from them. That's important because if you need a lot and you try to open interest the market, like you just write a bunch of new contracts, everyone notices because price shoots through the roof. It's what you want to do is let the market write the contracts and then take them. So in this situation, you could say decay retest, right? The open interest went up and this just swept out. So isn't there open interest theft right here? Couldn't you say that there are bears here? Yes, you could. No, not today. Why? What filtered that? The narrative. What's happening? The bulls, I think this was, more than anything, this was marking out that the bulls are indeed continuing with their objectives. The bulls showed up, the clouds parted, everything was great. And now they're getting liquidated. And I don't think this is a spot where the bears are thinking, let's pick that up and try and drive this. I don't think that's what's happening. I don't think that's a sensible thing to do for the bears. Maybe. It's true. They could, because that is liquidity. You can, when you steal contracts from somebody else who took the time and effort to write them, and then you take them from them, that's open interest theft and is liquidity. You got that from them. But I don't think that bears showing up right here is what's going on. They might say, hey, we want to defend this and we want to pick that up and see what we can do. Let's see what we can make happen. And I think, what are you guys gonna do? Like shove it down into the close so that it can gap up tomorrow? Like you lost tension. They lost control of the possibility space. Probabilities favor bulls. The bulls' positions have a higher tendency of success than the bears. Possibility space looks favorable. It's more likely that the bulls will have success. They have it. So these bears, what are they gonna? Okay, so here you go, trapped orders. You see those trapped orders right there? So if open interest theft was what I was looking for, I would say there's the trapped orders. They're showing up. And when those are done, that would be liquidity for the bears. I don't think bears are going to show up. I think they're going to walk away. We do see this all the time where you have open interest theft that is, a turning point. But in this case, I don't think it fits the actual story. Our narrative is that these bears, nope, weak, here we go, but it's a weaker hand. And then they try to show up maybe a little bit here. And the bulls have success. This is bulls. Bulls are here. Bulls are active. Bulls have control. Bulls have tension. Bulls have a lot of things supporting them. I think the bears showing up here would be a savagely stupid move. Savagely. It would just be ignorant. If you're an institutional player and you can see what's going on and you decide to jump in now, I think you should not be managing a fund. If you worked for me, I would terminate you. So that's what I think. And I think that we could probably pop up and that whole open interest liquidity could actually help accelerate this, maybe get us up to here, and we can close at 30.50. We get to 30.50. That I will evacuate the market if we get to 30.50 at any point. I'd be happy. That would be everything I wanted, everything. Just happy as can be. So you can see that it's pumped up. We're at the last, so we're not going to see anything happen over the next couple minutes. It's really going to change tension any. Now the question is, where do you close the market at? And I think at this point, these guys, if you didn't take profit down in here, then you don't deserve to take a break even. I don't think you deserve it. I think this should make sure those people close upside down. I think they don't deserve it because they didn't keep up and they didn't do the work that was necessary. Take the risk and follow the narrative. They were unwilling and they don't deserve an exit. I think these bulls want it. We can see that. They're here, so I think 30.50 would be a great place to close. Last couple minutes, I'm not going to hold on to this over the weekend. I'm not going to do that. I want to go do other stuff, come back, think about the whole week, metabolize it, ingest it, think about it, roll it over, think about what's coming up next, and then just operate on a fresh week. I like operating week to week, not day to day. But that's just me. You may like other things. Some people like to longer term trading. Some people like other things. This just suits me really well. I like operating week to week. So okay, so we're getting we're now right at that. I have this marked out because that was the last spot where that we had the bulls screw up. Or sorry, these bulls screwed up and they got liquidated, and then all of this movement down was just straight fear. I think there was no structure for it. It was not awesome, and we're getting to is right here, and right here is we're getting to the bottom of where that reality existed, and everything beyond reality was just people being crazy because it wasn't justified. There wasn't good reason for it. We didn't have bears coming in. We didn't have trapped people. So this is like bouncing at the bottom of reality, and everything above here, this was all structured stuff. Bears came in right here. They trapped the bulls. They liquidated the bulls, and then it just kept going. And so I look at that as fear. It was a big move. People got terrified, and it moved down. And so I think we're right at the bottom of reality. We're just right there. And everything below that line is just fear retracing. It's just going over those orders and dealing with them. And so popping up back into this, right up into this area here is going to put us back into reality where that we were at from yesterday, where I think that's what I'm looking at. That's what that line is there. I will delete that line at the close of the day. I won't be tracking it the rest into next week. So that's it. We have 1 minute left. What'd you do? Did you get styrofoam? Styrofoam. You know what kids do with styrofoam. Yes. And I just talked about this. Yes. You said you flatten your position every Friday and abandon it. Yes. Because I don't want to be a bumbling monster all weekend. I need my family because they balance me. If I hold trades over the weekend, I am just the worst. So for me to feel like I have a balanced life, I trade week to week. And for me, on the weekends, I shut off my machines and I do everything I can not to think about markets so that I have a balanced life. And that works for me. And this is fine. I mean, you don't think that this was a good move? I remember days in the market when we would say things like, man, we had a 20-point range. That was so big. You guys remember that? 20 points. And then I remember hearing people saying things like, oh, I remember back in the day when 2 points was a big day. I mean, we're seeing enormous moves in the market. I don't need to hold over the weekend to sustain myself. But yeah, I don't abandon the narrative. For me, I'm a meat and potatoes trader. let me tell you my goal, my personal goal. I want to find a trade. I want to get into it. I want it to run a good chunk of money. I don't know, 10 to 50 points. And then I want it to run another 200. I want the meat and potatoes because this is the best trading in all of the market. This is stress to me. And I can find opportunities to take advantage of this along the way. For me, though, I like meat and potatoes. I want to see it start. I want to get in. I want to get in with the size. I want to see that thing go because this is the spot that can support the most people. As things move on, we'll get other things and it'll get more complicated. We can see lots of things happening. But for me, yes, I will walk away from the trade, not the narrative. I will continue to track this narrative through all of next week. This is going to be this moment here is a big deal. So, all right. So that's the market. We closed. I hope everybody has a good idea about what to look at on Monday. Tension, watch for how right now the bulls want to pump tension. That's the goal of the bulls. The bears are now on the back side of they're back. They lost control of the market and they're going to need to see bulls fail before that they will be able to really jump in aggressively. So in either case, you're looking at that bullish position on Monday and you're giving it a little extra heavy weight because it's going to help determine how the market plays out. Bulls want to pump tension. That's the next thing. The dominant controlling party wants to pump tension. We need to trap some bears in, liquidate them, run this up, and enjoy. Okay, I will see you guys. Yeah, I'm sorry. I was reading a comment. Somebody was asking if there's other videos. Okay, in terms of resources, I have the live charts, which you can't see it, but if I point right there, there's a whole nother computer that streams charts out to the tradetrustgroup.com/live charts. There's the Zoom that runs every single day. Sometimes I forget to turn it on. So if I do, send me a message and poke at me. But it runs every day. It's been running every day. It'll always be there. The Zoom, you can watch those charts. There is the Discord. You can go ask questions with people, either me or other people who are familiar. There's the YouTube channel. There's lots of videos on this YouTube channel that you can watch to get an idea of how I look at liquidity and model things out if you want to take the time. I'm going to keep doing live streams so you can just tune in and I'll try and be blunt and open and talk to teach and stuff like that. And then there's my Twitter feed where lately I've just been posting links to the live stream, but I try not to post anything on my Twitter feed that isn't like relevant. You can go check those out. I've tried to put together. No, I'm not talking to you, Siri. A couple of resources there. Yeah, and that's what we got. So if you want links to all that stuff, I put links in the description below the video that you can click on to go to the Discord and all the other things that are available. Otherwise, you can always shoot me questions on Twitter or Discord if you have questions about something specific. If your questions are too general, I might take a little longer to answer, but if there's something specific, I try to answer as quickly as I can when I'm on. So yeah, okay. I'll see you guys next week. I am flattening out everything that I have. I will not hold anything over the weekend. Okay, bye.